How Higher Taxes Hurt the Economy. A presentation by Brandy and Randy Miller, small business owners of Creative Technology Services. This is Betty. She's a small business owner. She makes widgets. She's pretty successful. She makes $1 million a year. Of course, like most small business owners, she doesn't get to keep all of that money. Betty has 9 employees. She pays herself a salary equal to $40 per hour, her manager a salary equal to $20 per hour, and each of her remaining 8 workers $15 per hour. This means that Betty spends a total of $374,400 just on the wages of her employees alone. And she still has other bills to pay. 35% of her income goes to taxes, or $350,000. Widgets sell to the consumer for $10, but cost Betty $2 in materials. She pays her vendors $200,000 per year. Warehouse rent takes $1,500 per month for a total of $57,600 per year. Electricity costs $750 per month for a total of $9,000 per year. Phone service costs $200 per month for a total of $2,400 per year. Advertising costs $3,000 per month for a total of $16,200 per year. Insurance costs $1,000 per month for a total of $12,000 per year. Research on new widgets costs $350 per month for a total of $4,200 per year. This leaves her nothing after paying everything she owes. This is Bob. Betty's widgets are used in many of Bob's products. Bob's business brings in $10 million per year. Bob pays himself $156,000 per year. He pays his district manager $124,800 per year. He pays his 5 store managers $83,200 each per year, and his 15 assistant managers $41,600 each year. Bob then pays his 50 store employees $31,200 each per year. Salaries for Bob and his staff make up almost $3 million per year. Like Betty, Bob has plenty of expenses. 35% of his income, or $3.5 million, goes to taxes. Suppliers get $2 million each year. Rent, electricity, and phone for his 5 stores takes up $150,000 per year. Employee training takes up $630,000 per year. Advertising and insurance take up $450,000 per year. And Bob puts away $90,000 per year in savings. This leaves him $99,000 per year to pay in dividends to his investors. His investors then take this money to help more companies like Bob's. Unfortunately, due to tough economic times, some misguided people think Bob and Betty need to pay more in taxes. They don't think they're paying their fair share. So, politicians raise their tax rates to 50%. Betty must now find a way to make up for the $150,000 in additional taxes she owes. She can choose to lay off 5 employees, which would save her $156,000, but would also increase the time it takes to produce her widgets and comes with a possible risk of losing sales. Or she can raise prices. She raises her prices by $1. Bob's tax increase means he must now pay an additional $1.5 million in taxes, in addition to the extra $200,000 per year that Betty's price increase will cost him. He's going to have to make up that money somewhere. He could cut all 50 store employees. However, this would mean stressing out his management team and reducing the quality of the service he delivers to his customers. He could raise prices to cover the difference. To do so, he would have to charge an additional $35 per item. He knows this would make the product far too expensive for most of his customers. He could also scale back by closing 4 of his stores and laying off all the employees at those stores. After a lot of deliberation, Bob decides to close one of his stores and raise prices by $15 in order to make up for the extra money he must pay out. Bob sadly gives a pink slip to 10 store employees, 3 assistant managers, and 1 store manager. He knows this means that 14 families have just had their income severely reduced, but he didn't have a better choice. The money had to come from somewhere. This is Lena. She's a consumer who shops in Bob's stores. Every business that Lena interacts with has had to raise prices this year due to the tax increases. Lena's salary hasn't increased, so even though she's making the same amount of money as last year, it feels like a whole lot less. This means Lena has less disposable income, so she's going to have to cut back on things that aren't essential. She's going to have to stop going out to eat, getting her hair cut as often, and she won't be making as many trips as she used to either. And Lena isn't the only one that's feeling the impact of higher prices. Every consumer is. These stores all start feeling the loss of income just when their expenses start going up. More businesses close their doors. Politicians, seeing how much money is being spent on unemployment, decide that the only way to have enough money to feed and care for all these people is to raise taxes. Businesses find themselves with no other choice but to raise prices or close their doors. Consumers find their salaries shrinking as they get hit with higher prices and no raises. They have no choice but to cut back on spending. Faced with fewer customers at a time when their expenses are increasing, many businesses close their doors for good, and the cycle starts all over again. The reality is that higher taxes mean bad things for the very people it's supposed to be helping. It crushes consumers between employers who can't afford to give raises or can't afford to keep their doors open, and retailers who have to raise prices to survive. It's a lose-lose for everyone.